Unlocked, and we are here with a Forex market daily analysis for you on January the 14th, 2020, and we're going to see what's going on as we head into the signing of phase 1 of the US-China trade deal tomorrow coming up, and we are now 2 weeks away from, just over 2 weeks away from Brexit. Before we get into that, we want to jump in to show you our disclaimer real quick to remind you that this webinar is for illustrative purposes. Alright, now let's look at our live screen here at forex-trading-unlocked.com, and we already have the workstation page pulled up, which you can access from our menu bar at the top of any page. We're going to scroll past the numbers part for today, the calendar, because most of the numbers have already been out for the week or are coming out later. We do have a couple of strong economic numbers, but I think especially between now and tomorrow, not much is going to jar the markets as we head into the signing of the trade deal. So what do we have here? We have the euro US dollar up. Now the Brexit deal is more important for them, so that would be this line right here that I just put up here. This is on January 31st. So what's going to happen with the euro? Well, let's see. I think that the major low, last major swing low right here is what you have to key off of in the short run, right here around $1.1083. So right now we have had a corrective slide, and it looks like the bears are having a little trouble. The dollar index has had a nice rally over the past week and a half, and now has started to subside and lose some momentum. So if that continues, then the euro US dollar is going to start to probably lean more towards the upside to higher looking market. So we have still higher move highs, higher move lows. So with that being said, the overall trend here is higher. So we'll put this in here. Let's extend this out here real quick. There we go. All right, so we have the upward sloping trend line here, which gives you a good bearing on the slope of the bullish trend. And then we have this line here, which is our pivot for support. This would be our sell line right here. So if you are an aggressive bull, then I would say right now you're fine buying into this corrective break, which is what this seems to be. The overall trend is up. Today, obviously, the market is lower. Only a failure from this last swing low here around $1.1083 would have us off of the bullish path. The overall trend seems to be on a decent slope here, so it's probably, especially as the dollar index is under pressure, is going to see a little bit more sideways to higher action. Now, since we have this lower pivot to look out for, then we're going to use yesterday's high as our upside pivot. So we're in a tight little range here. Now that you got to look at what the range was for the euro US dollar yesterday. So today we have traded outside the range to the downside. We did not take out the high from yesterday. So to make a higher move high this morning when the market started out earlier and then fell apart, and now has come back towards the middle part of the range. So is it overly bearish? No, it shows me more that it's quiet going into tomorrow's trade deal, because this does impact the US dollar. So since the US dollar is kind of tight and in flux, you have this January 15th, January 31st. What does this mean for the euro US dollar? Well, considering that the ranges, if you look at it for the last couple sessions, like right now the low is at $1.1104 and the high is $1.1144. You have a 40 pip range, basically what you had yesterday. So the ranges here in the euro US dollar continue to be unimpressive, and so I would say that if you're a range trader, you're in a good spot. If you're an aggressive bull or an aggressive bear, I would wait for a breakout of the $10.83 level down to the downside, or to the upside of $1.11, a breach of $1.1146 rather, for momentum to go to the upside. So otherwise, within that area right here, I think you're going to have a lot of trouble in this little spot over the next few sessions. So this little area here, let's get this, make this a little bit cleaner for you. This is the spot here where I think you're going to have to, oops, there we go. All right, so here we have this little circular area that contains our range probably for at least the next session. going into tomorrow's trade deal. We'll see what happens with that, and then maybe the aftermath. Maybe we'll get a breakout on Thursday or Friday. So to see, tomorrow is the 15th. So let's look at our economic calendar. So for the 15th, we have GDP for Germany, not for the EU, and we have PPI for the British pounds, and also CPI. So we have a couple of numbers that could stir the pound as well as the euro, and then we have industrial production for the EU. So there are some numbers that could impact the pound and the euro versus the dollar tomorrow. But then we have, let's see, we do have CPI for Germany on Thursday, and then we have obviously some big numbers for the US coming on Friday. And yeah, we have housing starts and industrial production. So yeah, we do have some European numbers to take a look at. Not necessarily tomorrow, but on Thursday and into Friday is how that reacts. So we have the trade deal with China on the 15th here. We have the 31st, which is Brexit. So we have a lot of reasons for the euro US dollar to start to go sideways and of a momentum either to the downside or to the upside. So this market has been in a range trade for the most part for a very, very long time. As you can see, since October, it has been trending higher, but it's been going higher in a very slow fashion. I mean, here you had a low just below $1.09. This was back at the beginning of October that started the trend higher, and look at here, we just had a last swing high here just above $1.12, around, what was it, $1.12.39 was the high. So you're only looking at just over $3 in the course of 3 months, and also having some big news that we've had, you know, besides the Middle East conflict, which finally has settled down. So for euro US dollar traders, not much to look at for the next couple sessions. Be careful to watch out for those pivots. The British pound was looking weak yesterday. It's turning around again today. This thing has the exact same outlook. We have the 15th, which is tomorrow, and then we have obviously the UK leaving the EU for Brexit on the 31st. What's going to happen here? Probably more of the same. We're going to have most likely sideways, key off the last swing move high, and also this last higher move low. This pretty much, I think, contains your range, especially for the next week or so. Now, a failure here to $1.2899 is a big deal, but it has to really come down and take out this line over here. This is the key support right here around this $1.2758. So this is where, remember, we were bottoming and basing. So this overall trend for the pound US dollar is up. So I would be very leery of selling it. Now, because of the US dollar and the dollar index as it falls under pressure, if that continues after the trade deal tomorrow, and there's a likelihood of a dollar sell-off once this trade deal, the first phase, gets signed off, that this would cause the pound to rally. So for range traders, you're looking good between $1.2899 and $1.3283. Bulls, even if you get a rally, I'd be very cautious and with your expectations, thinking that you'll get a breakout. You probably are going to see a sideways trade emerge here, and it's going to most likely stay within these parameters over the next couple weeks. So there's not much to look at for these markets here. If you're a range trader, you got a lot of opportunities. Probably swing traders is probably going to be a nightmare. So we have the Swiss, and how does this fare when it comes to the trade deal and the Brexit deal? Well, Brexit, it does make a little bit of a difference. The main thing is the US dollar Swiss seems to be following the way of the dollar index. And if that is the case, then we are most likely going to see new move lows. So these lows that we set a little over a week and a half ago, that's what we're looking to test. We're looking for a failure there. Only a breach of this last lower move high at 97.62 takes us off the bearish campaign. I don't think that this is a sideways trade developing here. I believe that the dollar index is going to continue lower. So I'm going to say that as we trade past the trade deadline for the China and the US, and then also as we get past the Brexit escape, that the US dollar Swiss is going to trade sideways to lower in this period and make a test of this 96.46 level. How low can it go? That's a whole nother question. It could be a grind lower, but we'll see how that emerges. So that's what we're looking at for those markets. Now let's go to Japanese yen currency cross. Now, oops, US dollar JPY. Okay. All right. So here we go. We are back to here. We're loading it up, and we have had a nice little breakout. As you can see, the trend here in the the trend for the US dollar JPY has been steadily climbing since the fall. We had a really big correction here that was pretty symmetrical. If you look on a wave basis, you have your one wave right here. Let me do this. This will make it kind of easier for you to see. So this would be the top of your wave 1 right here. Then here we have your corrective wave 2 that comes down to here. This is your next big buy. And then we have your third wave higher, which comes up into this area right here. This is actually where it topped out, and then it struggled. We made a lower move high, then we came down here. So as you can see here, we pretty much channeled for this market. And we set a nice slope for the trend. So as you see, the overall trend obviously is a bull. And let's get this to cross there. Okay. So the overall trend for the US dollar yen is a bull. Now this is even in the midst of a potential sliding dollar index. The dollar JPY, no matter what, is on a bullish tear. It has been grinding higher no matter how much the dollar index sells off. The US dollar yen, for some reason, holds its ground. It's just been the way it is. Now this trade deal with China obviously is definitely something that impacts the Asian trade zone, but you have to look at this little area that it crossed here. This is really big, this little topping area, this resistance here. You failed to make a new high here. We came down, we corrected, rallied back up, and then spiked lower just a few sessions back to come, and then like a balloon underwater, rocketed. Look at this range here. From this low here that was set on this day, we were down all the way. The low is 107.65 with a high of 109.24. That's almost a full $2 range, and it's over $2.50 range in the US dollar or Japanese yen. That is bullish momentum. I can't tell you how big of a deal that really is for a spike, and to have that wide of a range, to have this body so wide and so strong, and to continue to lift higher and press into higher move highs. As far as how high can this go? Well, this is hard to gauge because you can see how much resistance this is. But when resistance finally gets breached, it becomes support. So I would find it likely that right now anything above this 109.56 keeps this market in a bull. But even if we were to come back down towards these upward sloping blue lines, that's nothing outside the realm of possibility here to come back and find some support as it then trends higher. Remember, just as we drew this little support line, you have pretty much this basing area here. So this is a big wide range here. Only a failure from this around this $8.35, taking us below the first upward sloping blue line, would then have us pressuring a potential slide, and definitely only a failure from this last swing low would really have us on the bearish camp. Let's really put that down there. Okay, so there's a lot of wide range territory of pivots here for the US dollar Japanese yen. Overall, though, I think you have to be an aggressive bull and see this market for what it is right now. Especially right now, we have, what is it? The Dow is slightly higher. Markets are kind of basically mixed as far as the U.S. Like I said, we have the U.S.-China trade signing, which comes tomorrow. I think that today's volatility is pretty much dried up for today. You're not going to see very much. And then we have tomorrow, there's obviously some economic numbers, but for the most part, the dollar is going to be pretty much, I think, in sideways going for the next couple sessions. And then we'll see how the US dollar yen reacts to the actual signing of phase 1. We still haven't gotten there. Who knows? We've seen lots of monkey wrenches get thrown into this. All right, now we have the Australian dollar, US dollar. Well, this market here seems to be drying up and going sideways, and this is going to happen as well too, because the Australian dollar, US dollar is hinging on this trade deal, because Australia has all its eggs in one basket, being China as its main source of its exports. So what's going to happen with Australian dollar, US dollar? Probably not very much, but I would say that this last higher move low, this is definitely our support base. Anything below here would have us bearish because that would indicate a lower move low after a lower move high. But right now we don't know if that's the case. I think that we're most likely going to see a sideways trade for a little bit, and we'll use this high right here, actual upwards breakout level. Anything within this, I think over the next day for sure, or a couple days, is going to be contained and be in a sideways trade. So for range traders, I think you got lots of opportunity, especially in a market, one of these lesser currency crosses versus the dollar, because they're really waiting on this. Once this moves, then we'll probably see the way this is looking right now. This market's in an overall bull trend. I think you're going to see sideways, maybe sideways to lower over the next session or two. And then once the deal gets signed tomorrow and the first phase is done, I think you're going to see a pop in the Australian dollar, US dollar. Key off the dollar index. Any slide in the dollar index probably will gain bullish momentum for the New Zealand or the Australian dollar, US dollar. And with that, we're going to go to the New Zealand dollar, US dollar. Now this market has been a bull for a while, so only a failure from this level here I think is going to really be what you have to watch. This is our support band right here. Now this market, because it's been such an aggressive bull versus the dollar, I think has a little bit more room to slide over the next couple days. I think the trade deal does impact it, but not as severely as the other markets, because while the dollar index was becoming a bull again, this market didn't have anything of it, kind of like the US dollar was with the yen. The New Zealand dollar is with the dollar. It says, I don't care. So the overall trend is up. We have a good spot here to digest still, a little bit of breaking side. So if you're a bull, you might take some heat, but I think only if you fail from this area here, you're going to get into trouble reversing the trend. Remember, we still have had a higher move high set, and we're setting higher move low. Only a failure from 65.52, 65.22 here takes us off edge and starts to have us looking at a neutral to bearish forecast, which we don't have as long as the dollar index looks like it's under pressure. So let's look at the US dollar Canada. This is going to be a little bit different. Does the trade deal matter? Does Brexit matter? Yeah, they do, but overall this one seems to be a little bit more on its own. Does this have room to the upside? Well, here's what we have here. We set this low back here just on the 31st of December. We started to trade a little high. We tried to test support. We failed to make a lower move low, which set a base, and now we made a lower move high. The question is, are we getting ready to make a higher move low, or are we done? So I would say that you have to key off of the recent higher move high as your breakout point to the upside. Below there, even though right now it's showing a positive trade, I think you're going to be looking at a sideways to higher trade, buffering up against this level, and then we'll see what happens as the phase one of the U.S.-China trade deal gets signed. If there's a dollar index sell-off, most likely you see this market fall under pressure and then see a run for support. But if it's not a dollar sell-off and you get a dollar rally, well then I think you're sure as can be going to see a challenge of this $31.05, and then how far can it go? Well, that's a little rough. I think that this, like I said, because the dollar index is under pressure, most likely isn't going to get above this $30.92. So there is some room to the upside for a breakout. I'd be very careful buying into that though, because I think it's going to go up real fast and then it's going to come back down. Remember, markets come out like they go in, and this is a very steep incline right now for the Canada. So when it usually gets like this, if it gets a little base, it'll come back up, it'll spike, it'll get maybe a day of digestion, and then boom, it's going to collapse again, especially because the overall trend is a grind lower. It's a sell rally market. So right now we have to look at lower move highs, lower move lows, which we are still in that. So fundamentally the trend is lower. So please be careful as far as if you want to buy or sell into this the move. So I would key off of this pivot here to $1.3105, and remember that this one is a little bit more free flowing than the other ones are. So we're going to go back to the Euro US dollar where we started, just to see how things are going. Now remember, we were looking at the pound and the euro because of Brexit. So let's look at the euro pound real quick. What is going on here? Well, with the euro pound, you can see that it's been going sideways in a tight range. The euro has been somewhat gaining strength against the pound, but as we head into Brexit, I think we're going to see more sideways than anything. A little bit of strength in the euro, so this gives credence also to euro strength versus the dollar. We also want to see the euro versus the Swiss. This is kind of a big deal too. Okay, so Swiss strength is big. Okay, so flight to quality. See how the euro Swiss is tanking? That means that the Swiss is strong. Now let's look at the British pound Swiss to see how that's doing. And this market here, now the pound has been pretty much the same chart for everywhere in most of the markets over the past couple months. And now this is getting weak too. So what does this show you here? This shows you strength. So remember, we looked at the US dollar Swiss. See how the pressure, how much strength the Swiss has versus the pound and the euro going into Brexit. And look at this, we're going into a trade deal in Brexit, and look at the Swiss. It's not making new move lows, but it certainly is set up to like it wants to. So flight to quality, my folks. The trade right now going into the next couple of weeks is dollar weakness, Swiss strength. That's something it looks like you can rely on. Those trends are very, very fierce, and then we're going to look for a potential change in those trends eventually, but I think you're going to have to go for another couple of weeks to ride this move before that occurs. So if you want to have any other trades to look at, like I said, I'd be very cautious going into tomorrow's trading. I think after Wednesday afternoon, evening, going into Thursday, I think you're going to get some wild trading come the beginning of Thursday's trade in Asia and Europe after they digest the numbers. So that would be Wednesday night Chicago time. So that's when Asia and Europe start to head online going into Thursday, and that's when I think we'll start to see volatility pick up, and then maybe your swing traders will catch a move. Just got to be on the right side. So right now, remember, we have dollar weakness. We're looking at Swiss strength, and then pound and euro probably going sideways over the next couple weeks, so don't expect very much. Canada is a free fall. Japanese yen is weak also versus the dollar. So with that being said, I want to wish you a good luck in your trading day today, and we are going to end this webinar, and please subscribe to our YouTube channel so you can find out when these videos come.